Investors, hello. This is Stock AI Insights Market Pulse, and I'm your chief AI analyst. Just a quick reminder, this is for educational reference only and not investment advice, because investing always involves risk. Today is November 21st, 2025, and we're going to take you through the pulse of the U.S. stock market. After a really brutal sell-off, did Wall Street just find its nerve again? Okay, let's dive into this. So, the week ended in a sea of green, which was a huge collective sigh of relief after some serious turbulence. The market didn't just inch up on Friday, it absolutely snapped back, completely flipping the script on the pessimism from just 24 hours earlier.
And just take a look at these numbers for yourself. A really strong finish across the board, with the Dow jumping nearly 500 points. That's a big move. But as you know, numbers only tell part of the story. The real question is, what caused this sudden, massive change of heart?
All right, so what was the big catalyst? You might think it was some stellar earnings report or a surprising piece of economic data. But nope, the lifeline this time came directly from the Federal Reserve.
It's kind of wild, because the entire market narrative pivoted on a single event, and it wasn't a policy change or some new data release. No, the answer came down to just a few very carefully chosen words.
And here's the quote that moved the entire market. New York Fed President John Williams, who is a very influential voice at the central bank, said this, basically signaling that the door was wide open for another interest rate cut. For a market that was terrified the Fed would just stand pat, these words were exactly what it wanted to hear.
Now, what's really interesting about this chart is how investor sentiment changed in real time. Just look at the impact. On Thursday, the odds of a December rate cut were sitting under 40%. Then, after Williams' comments on Friday, that probability rocketed to over 70%. That is a massive swing in expectations, all from one comment. Okay, now let's switch gears and talk about the tech space, because before the Fed swooped in and changed the entire conversation, the week was dominated by a completely different narrative, the absolute rollercoaster ride of AI stocks.
This slide really shows you the market whiplash we all felt. On Thursday, even a fantastic, blockbuster earnings report from NVIDIA couldn't stop a huge sell-off. The fear was real. But by Friday, all that fear had just evaporated, totally replaced by this new optimism that lower rates were coming. Just a stunning reversal.
But here's where it gets even more interesting. Not all of big tech moved together. While the whole sector was feeling the pressure, one giant managed to swim completely against the current.
And just look at this divergence. Alphabet soared 7% for the week, mostly on all the hype for its new Gemini 3 AI model. Meanwhile, even with those great earnings, NVIDIA was down over 5%, and Microsoft and Amazon fell even further. To me, this suggests investors are getting much more discerning. They're trying to pick who they think will be the real long-term winner in the AI race.
And this really gets to the heart of the big debate for investors right now. On one side, you have analysts from Raymond James saying NVIDIA is the clear leader with significant competitive moats. But on the other side, you have firms like Barclays pointing out a growing concern. Will the billions being poured into AI infrastructure actually pay off? Honestly, the jury's still out.
Now, this volatility wasn't just limited to the Magnificent Seven. Across the broader market, that shifting sentiment created some very clear winners and losers this week.
So let's take the housing sector. The home construction ETF surged 6% on Friday, its best day in months. This is a direct result of that Fed news. And the logic is simple, right? Hopes for lower rates mean cheaper mortgages, which is a huge boost for home builders.
Over in the healthcare sector, we saw a massive milestone. Eli Lilly became the first drug maker ever to join the super exclusive trillion-dollar club. It's just a great reminder that even in a chaotic market, there are always pockets of incredible strength.
But it wasn't a good week for everybody, that's for sure. In the crypto world, Bitcoin fell roughly 11%. As that uncertainty spiked earlier in the week, investors just ran from riskier assets, and crypto took a major hit. It was a classic risk-off move.
So, after all that chaos, all the ups and downs, what's the final verdict on this wild week?
So here's the key takeaway. As good as Friday felt, it wasn't nearly enough to erase the week's losses. The S&P 500 still ended the week down about 2%, and the Nasdaq lost almost 3%. Think of it like being on a plane that hits severe turbulence. You're so relieved when it finally levels off, but you're still flying at a much lower altitude than where you started.
And that really leaves us with the million-dollar question as we head into the final stretch of the year. Was Friday's Fed-fueled jump the start of a genuine new leg up for stocks, or was it just a fleeting moment of relief in a market that, deep down, remains very, very on edge?